if you get behind the wheel at Toyota, will your portfolio go places? We'll take a look. Today we're going to look at Toyota, the automobile giant based in Japan. I don't need to tell you, the listener, the viewer, what Toyota does or is, but just for a few of you living under a rock, let's say, or living on a bicycle, Toyota is probably the largest car company in the world. It's worth some $168 billion translated into US dollars. It's obviously a yen-based company in Japan. It's an industrial giant. How many cars does it make a year? 10, 11 million cars a year. What are some of the, you know, Toyota obviously, Lexus is another great brand, Daihatsu is another one, and they're good cars. I've owned 2 Toyotas, I don't own one now, full disclosure. They worked well. Toyota's a responsible, big, large company. Not always responsible. It recalled cars. Some 7 million cars had problems with their airbags in the United States. And that was a big reversal in the reputation of Toyota. How about the numbers? Let's take a look at the stock price here. You can see here the price is about $103 a share, down from about $125. The PE is interesting. PE is well under 10. I like that. There's a part of me that likes a lot of Toyota. I like the cars. I like the market share, 14% of the American market. It's a competitive market, not just in Japan, but global cars, and Toyota's a global car maker. Do I think Toyota's well positioned? I'm not a car expert. I biked to this studio. I didn't drive. But when I went to the Geneva Car Show recently, I looked at the Toyota cars. Many of them are well positioned the way General Motors used to be in the 40s, 50s, and 60s in the United States. A lot of hybrids, a lot of fuel efficient cars. So what's the reason not to like Toyota? The reason not to like Toyota is a currency reason. It's based in Japan, production's in Japan, it's yen-based costs. As the yen goes up, it gets more expensive to export those cars to global markets. So as a currency play here. The second is, it's more of a psychological thing, and some of you younger listeners will share this view. Not everybody grows up, says, I gotta own a car. 30, 20 years ago, everybody, a rite of passage in the adult world was buy a car. In the developing world, buying a car was a symbol of having arrived to a certain position. Now people look at zip cars, at mobilité, at many other cars, car sharing schemes. And so I'm not sure that the principle of one man, one car, one garage, one woman is going to play in the next 10, 15 years. That said, the earnings, the cash flow at Toyota is interesting. It throws off a lot of cash at what, 7.5 times earnings is the PE at $103 a share. If you can get this stock at $85, $90, I would not hesitate. At 103, you can make a case even at that price as a long-term portfolio hold. Toyota packs a lot of power under the hood. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.